Well, the focus today was always going to be on that inflation print. Now, of course, the Indian inflation print has also come in sharply above that 6.5% mark. But when we look at the global cues that have driven global markets, it's largely going to be driven by the US print, which has come in at 8.5% year on year for the month of March. In fact, a 1.2% jump even quarter on quarter. So when we look at the broad print, the expectation was 8.4% year on year for the month of March. That's coming a shade higher than expected, and markets of course responded. But before we look at the market response, let's look at how core inflation looked. Surprisingly, core inflation came in lower than expected. It was expected to come in at 0.5% month on month, 6.5% year on year. It's come in a shade lower at 0.3% month on month. US markets though rose, after which they eventually closed lower. So the rise was largely due to the fact that investors believed that inflation had peaked. However, they closed lower, largely on the back of a rising bond yield which had come through. When we look at US markets, they continue to remain under pressure, also due to the fact that oil prices went up sharply yesterday, up over 5% yesterday while in trade. And of course, the red hot inflation print will add to those woes. So when we look at the Dow, it closed around 0.25% lower. The S&P 500 was down around 0.33%. The Nasdaq also closed around 0.33% lower. Nasdaq is down now 5% for the month. And when we look at US futures in early trade today, well, they are higher. So they've reversed some of those losses and currently looking at a positive number when they start off later this evening. When we look at Europe, well, stocks closed lower, especially after the US inflation print. So there was a lot of negativity, at least at that point. The DAX was down almost 0.5%, the FTSE down over 0.5%, the CAC 40 down around 0.25% or so, and the Stock 600 was down around 0.33%. When we look at Asian indices outside of China, they closed in the red. Yesterday, China was in the green. When we look at the Shanghai and the Hang Seng, both were marginally higher. When we look at how cues are looking in early trade today, well, Asia is broadly in the green other than the Shanghai. In fact, the Nikkei is up 1.6% as we speak. The Hang Seng up around 0.25% as well, and the Kospi up over 1% as well. So strong cues coming out of Asia. The SGX Nifty though is trending slightly in the green, ever marginally in the green. It's around 0.25% higher in early trade today. When we look at how the commodity basket is doing, oil, as I did mention, breached that $101 a barrel mark, now currently sitting a shade below the $101 a barrel mark. Gold also gaining strongly after that inflation print, definitely encouraging investors. Gold is currently at $1,975 an ounce. When we look at bond yields, they had quietly crept up over that 2.8% mark, and that has trended lower over yesterday. It was in fact down 6 to 7 basis points yesterday, and now currently sits just below that 2.75% mark. Cryptos on the last point. Cryptos, well, they were a bit beaten yesterday. In fact, Bitcoin was still below that $40,000 mark even in early trade today, but as we speak, it's crept up over that $40,000 mark. So broadly, positive cues coming out, especially for Indian indices in early trade today. When we look at the SGX Nifty one more time, it's around 0.25% higher as we speak.